Hello everyone, the Chart Guys have been working on an introductory technical analysis course for quite some time now, and after surveying hundreds of traders with what would be the most sought after information regarding technical analysis, we came up with this course, When to Enter and Exit. It covers over 5 hours of the basics on when to enter and exit, and we feel after watching this course it will help build a foundation of technical analysis knowledge which will eliminate a lot of the uncertainty in the world of trading stocks. So the course outline, we go over the psychology of trading, establishing a game plan, the different indicators we use to signal a bullish and bearish entry, how to recognize support and resistance levels, poor entries, where traders make mistakes, exit targets, how do you know where to sell your trade, where to place stop losses, that's very important, minimizing losses is what keeps you in the game long term, my personal preparations, how I go about getting ready for each trading day, and then piecing it all together, utilizing all the information we just learned and how to apply that in the real world for making successful, profitable trades. As a bonus, we also include a lot of information on finding entries and exits utilizing patterns, and you can find these patterns on every time frame on pretty much any stock and commodity trading, and certainly being able to recognize those patterns can give you an edge as well. So we hope you will check this out. Again, it's an introductory level course. So if you are new to technical analysis and trying to get a firm grasp on things and feeling a little bit overwhelmed, then this course is for you. I hope you check it out. Appreciate you watching. Hey everybody, Happy New Year. Checking in on oil, and it was a wild day. We had a clear pattern over the weekend, a clear bull break, nice follow through, highest prices we had seen in pretty much all of 2016, breaking to higher highs, bulls in full control, and this dump came out of absolutely nowhere. It was normal, healthy consolidation for about 5 hours after that high was hit, and then it was just a complete dump. It took the market down with it, and very significant downside. So looking at it on the 5-minute time frame, you can see very normal, healthy consolidation on the 5-minute, and there were really no clues here on the chart to let us know that we were about to see an all-out dump. Now, we knew to be looking bearish once this consolidation low broke, 54.68. So we pulled back, hit that low, saw a bounce attempt, a lower high formed, and then as soon as we break that level, we start seeing lower highs and lower lows. So we know the bears are in control for the short term, but no way to anticipate that we're just going to take out every single support level and just all-out dump. So looking at the shorter term time frames in terms of the hourly, the RSI is just coming off of oversold now. Let's see what this bounce looks like. I have the bounce attempt right now is 52.65, so if the bulls can break that level, we do have some room to the upside, but look at that bear volume and look at the lack of bull volume on this bounce attempt. So the bears are still very much in control. The 4-hour chart also has some oversold conditions. Not sure why it's not coming up here. RSI. There we go. So it's actually not oversold. We never reached oversold, and that's because we were coming off of so much strength and coming off of overbought, really, over 70 on the 4-hour RSI. So an all-out dump, a bullish reversal doji is trying to be confirmed now. We'll see if this 4-hour candlestick can be confirmed. Look at the support down here, 52.06, and we hit 52.11. We are still maintaining one key support level. You can put a line there and see as long as that holds, the bulls are looking okay. Let's look at the daily time frame. We certainly gave back a lot of progress, but here's that level, and the low of the day on December 22nd was 52.11, and that's currently a double bottom to the penny of this dump. So 52.11, if that breaks, we're looking down at $50 psychological and then 49.64. So important, ideal scenario for the bulls is to hold 52.11, but if they can't, we're heading down to 50 psychological. So keep in mind that we did just come off of a new high and a high of 2016. So it's a very significant bull break, but this big turnaround certainly has us scratching our heads and wondering, okay, is this just a one-day event? Are we about to lose 52.11 and see another 4% dump to the downside to $50? Either way, the bulls are still in control at this point in time. Weekly time frame, bearish reversal candlestick forming, but again, $50 key support as long as $50 holds. I would say the bulls are still in control. And where I want to look at here on the weekly is the lack of resistance where we currently stand. if we see the bulls show back up. So we had that resistance at 54.21, and we got up to 55.21, and there wasn't much resistance here. Now we're looking at previous support. We had a range built as the bulls and bears did battle at $60 back in May and June of 2015. And some support down here, now resistance, 56.54. So the mid $56 range was the next resistance we were looking at. And we didn't really reject from that level. We rejected in between those two resistances to be watching. So if the bulls get over 62.56 in 2017, it's a very significant bull move because you can see the lack of resistance established on this all-out dump that oil had back in 2014. But as of right now, one step at a time, bulls need to establish support, ideally maintain 52.11, and try and turn this around. And I would be watching that 4-hour doji to see if we can confirm that and see some upside. And that high again is 52.65. Bulls want to break that level and recover because that was a pretty brutal dump off. And let's see what that did to USO on the daily time frame. Huge bearish engulfing candlestick after the gap up. Certainly a gap and trap scenario. And gap ups are more often than not for selling. Look at the examples we have just back in the past month. Here's a gap. That's actually not a gap up open. Here's a gap up open with the bears in control for the day. Gap up open bearish, gap up open bearish. Though I certainly would not be initiating any bullish positions on gap up opens. But USO lost that middle Bollinger Band support, which had been support for 6 weeks. Still maintaining higher lows, but definitely a bit of a wake-up call that the bulls want to be cautious here. And we'll keep track here, checking in each night. Happy New Year, and we'll see you tomorrow.